Hello everyone. We all know that there are different market trends operating in the markets. There are the long-term market trend, medium market trend, and there are the short-term market trends. There are also different time frames. For example, we can look at the daily chart, we can look at the weekly chart, and we can look at the monthly chart. All these charts will give us different messages regarding to where the market is going to go. And what are the ways to properly integrate them and interpret them correctly? Okay, and also what are the best ways to identify explosive market moves so we can profit from them handsomely? That is the topic we're going to talk about in this video. So if you're new to this channel, please consider subscribing. Okay, right now in this chart, we are looking at the daily, weekly, and monthly chart of SPY. Okay, the SPDR, which is S&P 500 ETF. On the very left, we have the daily chart, medium, the middle part is weekly chart, and the right side is monthly chart. Right away, you'll notice that each chart has three color lines. Okay, the green line is your short-term time frame. The pink one is your medium-term time frame, and the purple one is your long-term time frame. So just remember, green for short, pink for medium, and purple for long. And for now, you can think of these guys as the moving averages, but they are better than moving averages. I call these lines the power lines. Like the moving averages, they can give us general directions where the trends might be. But unlike the moving averages, they can actually help us to pinpoint price levels. And, they are very, very useful, as you will see. Now, let's talk a little bit briefly about multiple time frame analysis. This is a pretty hot topic in the world of market analysis and technical analysis. Everybody want to do market analysis. But guess what? Okay. Let's see what's going on here. Okay. A lot of times when people do market analysis, first thing they do is that they will put up a chart. Okay. And they say, okay, fine. We all heard that trend is your friend. So as a result, what do people do? Okay, I got to identify trends on the charts. Okay, so some people say, oh, okay, let me draw a trend line. That's probably the very first thing that everybody learned. Let's draw a trend line. Okay, so that's my trend analysis. But for those people who are more sophisticated or who are more mathematically inclined, they learn something called the moving averages. Okay, so I'm going to plot these moving averages. Now, the thing with moving averages is that, first of all, we all know it's a lagging indicator. Yes, it could give you trend indications, but sometimes it's lagging. So that means, after the trend has happened, then it tells you that. So after we tried a little bit, moving average or trend indicators don't work very well. So they heard about, oh, I got to do an integrated analysis. So I cannot just see one side. So the next thing they're thinking about is what? Okay, now I learned something called the oscillators. Okay, the oscillators are indicators like stochastics, RSI. These type of indicators, they will tell you when the market is too high, maybe it's time to go lower. Okay, so then they'll put on their charts, in addition to these trend indicators, they put these oscillators. But guess what? It doesn't really work. Because why? First of all, trend indicators tell you to buy high and sell higher. Okay, you're going with a trend. If the market is going up, you want to be longing it. If the market is going down, you want to be shorting it. Oscillators doing just the opposite. Okay, they're telling you that if the market is too high, it's time to sell. If the market is too low, it's time to buy. So you put two together, they are fundamentally opposed to each other. So you get confusing signals. Okay, worse yet, people say, okay, I heard about multiple time frame analysis. I gotta look at the long-term trend. I gotta look at medium trend. So now it does say you're primarily looking at the daily chart. Now I gotta look at the weekly chart. I gotta look at the monthly chart. So now they have these moving averages. Okay, let's say they put 3 moving averages like I do on this daily chart. So they're gonna put another 3 moving averages on the weekly chart, and they're gonna put another 3 moving averages on the monthly chart. At the end of the day, guess what? Now you got 9 different lines. Okay, and all of them have different values. Yeah, if you put 9 different lines out there, 9 different values out there, guess what? One of them is gonna hit. Okay, so you are not really doing analysis. You are just really guessing now. That's not the way to do proper multiple time frame analysis. In fact, a lot of people, a lot of analysts, a lot of traders got frustrated. They will tell you that just focus on one time frame, because the more time frame you have, the more analytical indicators, analytical tools that you have, ended up confusing you. You don't even know what to do, or give you the conflicting signals, and that messed up your trading altogether. I don't blame them, because most people don't know how to do multiple time frame analysis or integrated analysis correctly or properly. Okay, now let me tell you how to do the correct analysis. First of all, we have to develop an indicator that has this congruent property across all different time frames. The example I gave you before, right now also had 3 charts. I have 9 different lines now, 3 lines on each chart. If you remember, they are not 9 different values. You cannot have that. They have to, one time frame have to be able to correlate to the next time frame. So you don't have these 9 different confusing lines. Okay? So the power lines, okay, they give us values. They give us trend indications. Okay, so now we look at it. The leftmost chart is the weekly chart. If right now we look at the pink line. The pink line is what you have, it's what I call the medium chart. Okay, medium on the daily chart. What is the medium time frame on the daily chart? It's a short-term time frame on the weekly chart. Okay, because weekly is obviously the next higher time scale to the daily, and the monthly is another higher time scale to the weekly. Okay, they go either in a multiple of 4 or 5. Right, they have 5 daily charts make 1 weekly chart, and 4 weekly charts make 1 monthly chart. So what is the medium on the daily is a short term on the weekly. Does that make sense? Now let's see what happened here. On the daily chart, the value for the medium line, which is the pink one, is 258.71. Everybody see it? I'm putting a yellow rectangle next to the value to draw your attention to it. Okay, so now the middle one is the weekly chart. What is the value? So now it's the green line now. So what is a pink on the daily become the pink on the weekly? So what's the value of the green line on the weekly chart? Right here is 257.99. Okay, 257.99. On the daily, it tells us 258.71. On the other one, on the weekly, it tells 257.9. That's almost 258. So they are only off by 0.72. They are fairly close. Okay, they are very, very close. They might as well be identical values. Understand? So 0.72. That's a 0.027. 0.27% of difference. Okay. Now, again, let's go to the next time scale. On the weekly chart. Now, weekly chart, the medium is the pink line. It should be similar to the green one on the monthly, on the next time scale up. So, on the weekly chart, the medium time scale, you know, the pink line, the value is 267.67. 267.7. What is the green line? The value of the green line on the monthly chart is 265.78. 265.78. Okay? It's off by a little bit, about 1.5-ish. 1.5, 1.6. Okay? And the reason, don't forget though, these are calculated from different bars. They're still very close. Okay? And they're calculated from different bars because on the weekly chart, it's calculated from the weekly bars. They are 4 bars. There are 4 more bars when you calculate on the monthly, and yet the value are all very similar to each other. So that's what we mean by interlocking, congruency across the time frames. So instead, now you won't have 9 different lines. You're actually going to have just a few lines. So let's see how many they are really. Okay, let's start with the daily chart. So you have the green one is 260.64. Okay, that's on the daily chart. Look at, guess what? On the weekly chart, the purple line shows that 260.39. They're only off by 0.25. You see how these 2 lines, they're almost identical? So that's telling you That line right there, that value, 2.260.64, 2.260.40. So it's about from 260.40 to 60 level, that 0.2 back and forth. That's a very important level for either support or resistance, depends on where the market is. Okay, so they are not really two lines. They are one line. Okay, now let's look at the pink one. 258.71. We say that that value is very close to the green line on the, let me use a different color. You know what? Let me, there, oops. Let me use the pink color. Okay. So, on the daily chart, it's 258.71. On the weekly chart, it's 257.99. They're off by a little bit. Now, can we find similar equivalent number on the monthly chart? Right here, 258.10. Everybody see how, even though they are three different time scales, okay, and you know the unit of calculations are different. Don't forget now, on the daily chart, we are calculating each daily charts. If you look at on the monthly chart, it's 258.1. They're only off by what? 0.10, 0.1. Okay? You see how close they are? This is how you do precise calculation. This is how you know this indicator is good for multiple time frame analysis. So right now, we have pretty much two different values. Finally, let's look at the purple line right here on the daily chart. Okay. Let me try to change the color. Okay, here we go. Let's make it into a purple color. That is 266.39. We don't have any value corresponding in the weekly chart. How about on the monthly chart? We don't have it, but that's a significant point. Okay, so finally, let's look at the purple chart, purple line on the monthly chart. So let's change to a green color. So if you look at this, even though on surface it looks like there are 9 different lines on 3 different charts, in reality we only have how many lines? 1, 2, 3, 4, and they are all consistent throughout different time frames. This is how you do a proper and integrated multi-frame market analysis. Now, what can we do with this information? As it turned out, quite a bit. Okay, let me get rid of this rectangle and we get into it. That's it. Right now, you are trading with daily chart. That's your primary focus. Okay, have you ever wondered how come certain moves are bigger and certain moves, even when you're right, they don't move as much? Why is that? Okay, again, the answer could be found in multiple time frame analysis. Let's look at here. Right now we're looking at December 12th, 2018. Everybody can see the market has a big, nice drop right here on the daily chart. Okay. Why is that? Well, first of all, from the daily chart we can see it's very simple. Let me draw a yellow rectangle here. The market has been trying to rally, and it tried to hit the green one, but it cannot. It cannot go above the the green resistance. So I'm putting a red arrow here. As a result, the market went down. But why so much? Okay, look what happened here on the right hand side on the weekly chart. On the weekly chart now, look what's going on here. I'm putting a yellow rectangle right there. That's the equivalent over there. Look at that. On the daily chart, we don't see much. Okay, we do know that if we drop, there's no support, there's no line beneath it, there's no support underneath, so the market is going to go down. Okay, and by the way, On the daily chart is what I call the small size players. And on the weekly chart is what I call, you can tell the activity of the medium sized players. I actually did another video explain the different size of players and their respective roles in the market. I will link the description of the video, in the description below, so you guys can go to the link and look it out. So now we go to the right hand side. That's the weekly chart. Look what happened on the weekly side. Okay, on the weekly chart, the market had a support right there. Second time it tested. Second time it tested the purple line. This time, except it dropped. It dropped. So it failed the support on the weekly chart. Okay? And it also could not climb up. So because the influence from the weekly chart coupled with the price action on the daily chart, that's why it results in such huge move. So if right now you are a short, this is a great place to get shorted. Because any other place before that point, up to that point, look at it. There's a whole bunch of lines. The market just going to be in a big trading range. I draw, a blue oval right here. Because they are confined by these three different lines. They act as support, resistance, and the various boundaries on the prices. But once they broke below it, look what happened. That's a very beautiful, nice short right there. Okay? This is the power of multiple time frame analysis. Okay? Now, so this is the daily chart, multiple time frame analysis. Okay? They can tell us, if right now you look at the weekly chart, how are they going to move? But can they tell us, as a daily chart wise, how are they going to move? How is today's action going to end it up? Of course they could. Right now we've been looking at, if daily chart is our fundamental unit of focus, we've been looking at the units that's larger than the daily chart, like weekly and monthly. But can we now also go the other way? We can also go lower, go within. Okay, so now we're talking about intraday charts now. Now we're talking about minute charts, hourly charts, and stuff like that. So what is the next time scale beneath the daily chart? So for those of you who are day traders or who wants to fine-tune your market entry and market exits throughout the trading day, you got to look at the time scale less than a day. So what would be a good time frame to use? So before, we know that the scale is usually going up 4 or 5. If you go to the weekly chart, it's a factor of 5. From weekly to monthly, it's a factor of 4. You know what? Let's do a compromise. How about 4.5? Okay, 4.5, right? The average between 4 and 5, 4.5. So in the US stock market, we're looking at S&P here. The markets started trading from 9 o'clock in the morning, New York time, and it's 9:30 in the morning, New York time, and it stopped trading at 4 p.m. So altogether, the market trade for 6.5 hours throughout the day. So 6.5 hours times 60 minutes, that's a total of 390 minutes in a regular market session. And divide by 4.5, we have 86.666, or about 87. But 87 is an awkward number. That's rounded up to 90 minutes. So the next scale below the daily chart would be 90 minutes. Okay? And if you want to take it down further, so 90 divided by 5, okay? It's 18. Or that's rounded off to 20 minutes. So the next scale beneath the 90 minutes will be 20 minutes. So you want to take it down below 20 minutes, that's divided by 4. So you get 5 minutes. And 5 minutes, you want to take it down to the next scale, that's divided by 5. You get 1 minute. And 1 minute give you 60 seconds. So you want to divide again by factor of 5, it gives you 12 seconds. Then 12 seconds, you want to go further down scale, you divide by 4, it gives you 3 seconds. So now if you want to divide further down, it can go to a nanoseconds, what have you. Now we get to the realm of high frequency tradings now. But I'm just putting it out there for those of you who are interested in doing market analysis in an ever smaller time frame scale. It could be done, and this is the way to do it. Okay, now, what can we do with this chart? Right now, we are looking at S&P 500 90-minute charts. Okay, so we are looking even micro now. Before we looking macro, from daily to weekly to monthly. Now we're looking at micro, from daily to a smaller time frame. So this is a chart that I did in a previous video, which I did in Chinese. That's the chart was right there, marked there, okay? Because back then, okay, if we look at this right now, the time frame analysis, you look at point C. Last time I ended the video, I think I did it back in January 22nd. At the time I told people that the reason that market is going to rally is because, if you cannot break below the pink one, the pink line, okay, the market is going to rally. That's point C right there. That's back in January 22nd. And look what happened since, okay? For the next 2 days, January 23rd and January 24th, the market is hovering between the green line and the pink one, okay? It cannot drop below the pink line. And in fact, every time it touches the pink line, it rallies up. And it hover at the green line, okay? And the market go back up. And that's where we are right now. And where did the market ended up? Last Friday. Okay, that's labeled with D. Okay, let's make this letter bigger. At level D, let me pull up this chart so it's easier for you to see for those of you on a cell phone. Everybody see how the market touch the green line and rally bounce right back up. So that act as the support toward the very end of the day. Okay, so that's why these lines are very important. And this is how you do now you guys see it now. Okay, now we have 4 time frames and how they all interlocking and working together in sync. And this is how you do a proper multiple time frame analysis. Okay, so I want you to take away from this. In order to analyze the market properly, you must understand that there are different players and different time frame, different type of trend operating in the market here. And the way to do it is that you must understand, or at least have some idea, how all these different players and different time frames, each one exert their influence in the markets. Okay, and so then we can make the decision properly. So my question for you right now is, how are you, knowing this knowledge, going to do your analysis differently now? How are you now going to look at the charts differently? If you are primarily a daily chart trader, how might you looking at the weekly chart different? How might you get the clues or the helps from the weekly chart to help you trade the daily chart? Please let me know in the comment section below, and I will see you in the next video. Goodbye.